All right, so happy holidays, everyone. This is going to be my last video before the Christmas break. And I think for me, one thing I asked from Santa was for a Christmas rally. And I think we got that. I think we did see a Santa Claus rally. And 3 days ago, I asked our Generational Wealth Builders community that, are you guys still expecting a Santa Claus rally? 62% of you guys said no, whilst 38% of you guys remained optimistic and said, yes, it can still happen. And I believe we did see a Santa Claus rally, especially in a lot of the companies that we invested in. So for example, Celsius, right? Celsius has been hammered since Q3 earnings. And as you can see, it dropped to lows of $62.76. But since then, you can see it's pretty much rallied all the way to December 23rd, up 15%, which is not a bad move in just about 2 weeks. OPAD, very similar, also was beaten down in December. And we saw a bit of a rally. It's up 14% since its lows in December. Same thing with HIMS. I mean, HIMS got absolutely destroyed during this tax selling period. But as you can see, from December 14th all the way to December 23rd, stock rose 20%, which is a strong move off its lows. OPENDOOR also saw a bit of a rally from its lows of 1330. It rallied about another 10%, which is very good to see. Facebook as well had a really difficult December, and that's when we started loading the boat on Facebook. Off its lows of 306, you can see we're at 335 as of market close on the 23rd, and that represents a 9% move. It's a similar story with Tattooed Chef. I mean, we went to lows of 1516 during December, but we had a nice rally, about 7%, which isn't too bad. I mean, it's not the best percentage gain of the bunch, but it's still a rally nonetheless. But if you look at Tattooed Chef, it's really not done much since earnings. You know, it's been ranging between $15 to $16. You know, that's been the range. I think it's partly because we haven't really heard much news from the company. I mean, we did get confirmation of the acquisition of Belmont. That news came out a couple of days ago. Then they pretty much informed us that they've completed that acquisition. This is something we already knew going into Q3 earnings, and it cost the company approximately $80 million in cash and in stock. So again, no real news from that standpoint, and as a result, the stock really hasn't done much. But it's very good to see that Tattooed Chef has pretty much held $15 as a base going into this tax selling period, and I see that as a positive going into January. I think the worst performing stock for me in my portfolio during this rally was Big C. Okay, so Big C only rallied 6% off its lows, but sentiment towards Big C is starting to shift. Big C recently had an analyst upgrade from Wedbush. They see a 30% upside in the stock going into the new year, with the analyst raising his ratings on Big C to outperform from neutral, but lowered his price target to $50 from $60, as he believes the Austin, Texas-based company is about to lap difficult comps starting in the first quarter next year, which would lead to accelerating growth rates again, particularly in partner and service revenues. So this is very good to see. However, it didn't really impact the stock that much. Like I said, we only saw a 6% rally, and that's Big C. Airbnb is another company that got destroyed due to the O variant news. And, you know, we dropped to as low as 151. And if you're on my Discord, you would know I've been loading the boat on Airbnb because I felt like even though the O variant, yes, is highly transmissible, according to what we're being told, I did think it was a short-term catalyst. So I loaded the boat on Airbnb. And since its lows on the 20th of December, I mean, the stock has rallied 13%, which is very good to see. Now, a brand new position that I started recently was in Tesla. So Tesla dropped to lows of about 894, and I alerted my Discord that I started buying Tesla once again at 899, and since that we've pretty much rallied 19% since those lows. Now, of course, I'm not claiming to say I can time the market. Of course I can't. But I felt like a lot of the selling pressure that we saw in Tesla was as a result of Elon Musk selling. There's rumors now surfacing that he's done selling, and there are some people who are arguing that he isn't done selling. I'm not really too fussed. I think with the amount of catalysts that Tesla has coming in 2022, I felt like Tesla sub $900 was a fantastic deal. I mean, Giga Berlin's coming online, the Cybertruck's coming online, unexpected higher delivery numbers, growing the bottom line and the top line. There's so many catalysts in 2022, and I just couldn't really see Tesla being worth sub $900 in 2022, which is why I decided to start a position, and very happy I did, because we've seen an aggressive rally since then. Now, I know in some previous videos, I've said I was done buying, that I was all in, and I'm only going to keep 5% cash. And I can almost guarantee I'm going to have people in the comment section saying, oh, you said you were done buying for the year. Why did you start a new position in Tesla? And the reality is, guys, I have multiple streams of income that cash flows into my bank pretty much on a daily basis. And I'm not saying that to brag, but I'm saying that because I have new cash coming in, okay? And to be honest, I'm not really quite ready to start growing my cash pile just yet. And I notified my Discord here. I said, hey guys, I've had some new money come in over the past few days from my other businesses, and I'm not quite ready for my cash pile to begin building up just yet. Happy with 5% for now. UK property prices are discouraging presently, so I've decided to park some of this new cash in Tesla for just 6 years at 899. Not a position I plan on building, just simply a cash park based on some technical factors I see in Tesla stock. And I posted the Fibonacci retracement tool. And as you can see on the Fibonacci retracement level here, the 890 level was very strong resistance, which Tesla failed to break back around September, I believe it was. And then of course saw a solid pullback. But then eventually the stock broke through that resistance and continued higher to set new all-time highs at 1249. But the stock, of course, pulled back since then. I mean, Elon Musk selling the old variant, many catalysts that resulted in this pullback in the Tesla stock. And the stock pulled back to what was strong resistance. And I felt like this would become strong support. And that's exactly what it did. I mean, it literally rebounded off this support level here and continued higher. So that's why I started a new position in Tesla. It's really just a cash park because I'm not prepared for my cash pile to exceed 5% just yet. So I felt like I really needed to explain that. And I also wanted to encourage you guys, if you only have one stream of income, try your best on working to get another secondary stream of income. I mean, there's so many opportunities out there online, so many work from home jobs that you can take up on a part-time basis. I mean, even the GOAT himself, Warren Buffett, says never depend on single income, okay? Make investments to create a second source. And there you go. That's from the GOAT himself, Mr. Warren Buffett. Now, will this rally continue? This is the $1 million question, but I believe so, okay? Because remember, we're now going into the January effect. And if you're not familiar with what the January effect is, the January effect is a perceived seasonal increase in stock prices during the month of January. Analysts generally attribute this rally to an increase in buying, which follows the drop in price that typically happens in December when investors engaging in tax loss harvesting to offset realized capital gains prompts a sell-off. And I mean, that's what we've experienced. I mean, tax loss selling actually began in November. So throughout November and throughout December, we saw stocks getting absolutely destroyed due to tax loss harvesting, in combination with the Fed and also the new old variant. These factors contributed to the deep sell-off that we saw in November and December. So going into January, you know, tax loss harvesting is now officially done. People who started their tax loss harvesting very early on can now buy back the stocks, especially when they're seeing these companies already starting to rally. You know, this is usually where FOMO kicks in, you know, the fear of missing out. So we might start to see a bigger rise in January, which would be very good to see. And that's what I've asked for Santa, for myself, and for you guys as well. So this is just a quick video just to say a Merry Christmas to everyone. So yeah, I hope to see you guys after the holidays. Make sure you enjoy yourselves, indulge. It's been an interesting year overall. So take the time to almost switch off if you can. Spend time with your loved ones, and I'll catch you next week. Take care, guys. Peace.